Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you'll find across the markets today. I do a couple of things. The first thing is I teach a course where I teach two specific gap trading strategies. The first one are the morning gap trades. This is where stocks that are gapping higher or lower at the open, generally from an earnings announcement or another news-related event, those stocks create an opportunity for traders. The opportunity is for traders that can identify a specific price level where these stocks should have a price reaction in the other direction. First, they're drawn to a specific number, and at that number, they generally will have a price reaction in the other direction. We're going to go over some specifics in a minute, but the second part of the course is the gap fill trades. When stocks do gap higher or lower at the open, they create what's called an open gap. Open gaps at some point in the future will be filled. I give my traders a tool to track them. I teach them how to trade them. As we know, not all trades are created equal, so therefore we have to understand how a stock comes into a specific price level determines whether or not it's a high probability trade. All that's discussed in the course in great detail. So the other thing I do is I give my traders an opportunity to get my gap trades sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even open for business. Here's a copy of today's email, and as you can see, it showed up at 9 a.m. Monday mornings are usually a little bit quieter than the rest of the week. However, we did have 5 possible gap trades on the board today. We had BTI, we had Hertz Global, Regeneron, Big Mo, and Clovis Oncology CLVS. What we're doing is only taking the trades that have the highest probability of success. If a stock doesn't come into the particular price level that we calculate as the high probability trade, we leave it alone. We don't want the trade. We only want the highest probability trade setups we can find. As a result, 2 of the stocks came into their price levels today and 3 did not. So we'll go over the 2 that did. The first was Hertz, HTZ. I say gap lower. Support levels are $15.49. Another level at $14.86, and even a third level at $14.26. Stop and profit target is about 12 to 22 cents. These are minimum profit targets. The second one that came into its price level today was Clovis Oncology, CLVS, gap lower. Support levels are $88.47 and $82.97, and then I even gave a third level, but that didn't come into play. Stop and profit target is about 45 to 85 cents. Again, minimum profit targets. Let's go over, look at the charts of Hertz and Clovis and see exactly what happened during the trading session. As you can see, on Friday, Hertz closed up at 1739, I believe the number was, all the way up here. The stock was opening this morning at 1605, a pretty good sell-off. It came right into the level at $15.49. You can see what happened. It started to carve out a low, and then just minutes later, we were at a high of $15.75 for a max possible gain of 26 cents. Exactly what we were looking for as outlined in the email that went out at 9 o'clock before the market even opened for business. Now, as you can see, the stock consolidated right on that level for about 40 minutes. Actually, a little bit longer. About an hour, it consolidated around the $15.50 area back and forth. That tells me, and it also tells other traders, that the stock is generally going to head lower after a consolidation like that. So the stock did come into the $14.86 level. However, that level didn't really hold. So therefore, I, as one, got stopped out of the second trade. Got a profit on the first, got stopped out on the second. And that's just the way it works. We can't win every trade. We all know that. We even had a third level down at $14.26, but it hasn't got there. Right now, it's fighting to get back to and above the $14.86 level. But it didn't hold, therefore it is what it is. We can't win every trade. But I'm going to point something out in a minute just to show you the bigger picture. Taking a look over at Clovis, the stock closed at about $98 on Friday. The stock was opening down significantly, getting killed at the open. opening about 91.44 and immediately traded lower. Now this is one of those biotechs, so this is a high beta stock. It's a riskier play. Therefore, you have to give it a little bit more room sometimes, especially when you see a stock trading that has a very wide spread. At the open, and while it was trading for the first 10 or 20 minutes, this stock had a wide spread. At times, the spread was 50 or 60 cents even. As you can see, the stock pierced through the level at 88.47, went a little bit lower, even slightly past the stop loss limitations set forth in the email, but those are about numbers, meaning if I say a stop loss is about 75 cents, then it's about 75 cents. It could be 85, it could be 60, it could be 90. It's an about number. It becomes a trader's choice. The point here is that we know that the price levels given out, in this case, the 88.47, is a very specific price area where a stock will be drawn to and expected to have a price reaction from in the other direction. However, sometimes they bounce on the number, sometimes they go slightly below and then reverse, and that was the case in this particular stock where it went slightly below, but you can see what happened. Just minutes later, we were already at a high of $90.44, almost a $2 bounce from the level at 88.47. This was definitely a higher risk play, but traders understand when you look at a biotech, for example, with a high beta name, it's a higher risk trade. What I like to do on the higher risk trades are I like to trim my share size a little bit. So instead of a full position, sometimes I'll take half a position or 3/4 of a position or start in quarters. Again, that's trader's choice, obviously. As you can see, for the majority of the trading day thus far, the stock is trading in and around the 88.5 level, back and forth, back and forth. If it should come down significantly lower, we have another level below. There's one more thing that I want to point out. We talked about the fact that you can't win every trade. That's just part of the business. But what I do want to point out is the exact performance from last week's trade. We had a lot of trades last week, and I just want to give you the performance that was sent out over the weekend to my traders, just as a recap. As you can see on top, this is the performance week ending July 28, 2017. We had 14 possible trades on the board, and here's the list of the trades, and if I scroll down a little bit, you'll see the results. Total number of trades, 14. Total wins, 12. Total losses, 2. That's an exceptional week. The average was 85.71% winning percentage. It generally comes in and around the mid-70 percentile. The losing percentage is obviously the flip side of that, a little over 14%. Average winning percentage per trade, 4.89%. Average losing percentage, 1.15%. We like to stay around or at least inside 1%. This week was slightly over 1.15%. But the total profit, if you add up all the trades, all the positive trades, including the 2 negative trades, we had a 23.37% win trade or win rate on the trades combined. So this is maybe a little bit better than the average. However, it's really not that far from the average. In other words, we can't win every trade, but we usually win right around 75% of the trades. That's about average. And when you couple the fact that our losers are very small, I'm a big proponent of you lose small and fast. And when that happens and you shed the losers very quickly, you get winners. Some winners we get 1% out of, 0.5%. Here's one, 0.8%. But you're also going to get some where you have 2%, 6.5%, almost 5% down at GT on the bottom. So you get those runners where we have a maximum gain of a large percentage. And what that does is it's able to compound the wins much more quickly than the average trading strategy you'll find out there. So I thought it was worthwhile to show you a little twist and show you last week's performance. This is real. This is each and every week. Some weeks it's 75%, it's 80%, it's 78%, it's 72%. It is what it is, but it's always good. This is a strategy that you can use for the rest of your trading career. Everything you need to know in order to trade the gap successfully is taught in the course at Lazy Gap Trader. I'm David Frost, LazyGapTrader.com. Thanks for tuning in, folks.